Good morning, everyone, and welcome to Nadex Morning Analysis, where we look at hot spots in the markets for the day. It is August 11th, and we indeed have some hot spots. If you weren't paying attention, we just had our CPI report checking inflation in the United States. Before we jump into it, by the way, I'm Todd Rich with Nadex. With me from Keep Trading Simple, Brian Caprice. Before we jump into that, I do need to share this quick disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So let me switch my screen real quickly and I don't think it's very difficult to see. All right, the CPI number came in and an immediate impact on the dollar. Dollar's getting hammered. This is the Euro USD. I brought this one up mostly to show you it's a pretty big spike. I'm going to let Brian run through the numbers and even explain why, if you were paying attention, the opportunity that was available and afforded to you, particularly in binary options when you see a move like this. After we talk about the Euro USD and we're talking about inflation, we are going to talk about oil today. The reason we're also going to talk about oil, it is factored into those inflation numbers, but there is also the U.S. oil inventory report in 2 hours at 10:30 a.m. Eastern, and you'll want to be paying attention to that. Oil is a supply-demand driven product, and we're getting some glimpses on what's going on with inflation. We'll get a glimpse into where we are with supply. So with that, Brian, I'm going to flip it over to you.
Sure.
And let's run through those CPI numbers.
Yeah, so I mean, obviously the forecasts they're slightly different everywhere, but at least as far as what the general consensus was, CPI month over month, just the full grand was supposed to be 0.5, came in at 0.5, right on. So not really anything too crazy there. Now the core CPI number actually did miss a little bit to the downside, still positive, so we're not seeing the disappearance, right, of inflation. Still continuing to decrease, but again, did drop lower. It was supposed to be a 0.4, came in at 0.3. Slightly different. Again, that would be enough to weaken the dollar out there. When you dive into the actual report, and again, there's a couple ways to look at this. When I mentioned, I mentioned that a couple of the Fed presidents, they keep saying, yeah, we're just getting the 2% and those kinds of comments, but none of the data is justifying that. And when you're looking into the report, there's a lot of data in here and a lot of things you can take from this. It says the indices for shelter, food, energy. I mean, I'm sure those are pretty important things for us to have. Shelter and food are pretty important, right?
Yeah,
and then new vehicles
so
all continue to increase in July. And those are seasonally adjusted. It doesn't look fancy, but you guys can actually click on the actual report yourself if you like, and you can go in there and kind of see some of the things. And some of this data is really earth-shattering. When you look at the unadjusted 12 months, some of these numbers are insane. Gasoline, in 1 year, we've watched inflation creep in of 41.8%, which is absolutely just crazy. Electricity is up 4%. Food is up, depending on where it's at home or not, is up 3.5%. It's used cars and trucks up 41.7%. The only thing down inflation-wise is medical care commodities. But transportation services, shelter is up a little bit in here. It's amazing how much things are actually going higher. And again, fuel oil up 39.1%. All electricity is up. It's crazy. So even clothes up 4.2%. So there's a lot in there. You can go in there and dive. And again, there's a lot of different reasons for this. But again, have not seen the true transitory inflationary number yet. Again, lower, which is they're not going to hit all of them. You can see that they typically don't hit right on, but last time we had a little bit of a drop, we really started to pick up again. So, we'll see how it rolls forward. The response so far has been dollar weakness. Again, whenever it comes in lower than expected, that is one of the triggers for dollar being weaker. Yesterday, we had a couple different Fed presidents speak. They were actually talking last night about tapering, probably the probability increasing to December this year, and they were kind of going through all the assets that we're supporting the economy with. But them saying December 2021 is much better than what we've heard the 23 range. So they are acknowledging things, but this is
And
you know,
that's right. That's not an interest rate change. That's just the tapering of their
that's just a
purchases.
tapering. Yeah, they're not raising interest rates yet, but that's just the support that they're actually putting into the economy. So
Right.
it's crazy. Now, if you guys have been following the last couple of days, you guys know that the euro dollar yesterday we covered it. We talked about this being a level down here at
Right off that
117.11.
level. Yeah.
Yesterday it hit it. It didn't do much, and this is why I said I love news. You can see yesterday with a lack of any news, and I'll make it big so you guys can see it. It didn't do much, right? It bounced off that level, kind of came back up again, touched it again last night, came down, and then today we opened there for the European session. Now, two ways you guys could have traded this. I always talk about those shorter duration binary contracts. I didn't really expect a whole lot of movement in the European session because, again, everybody was waiting for CPI. But had you used that level that we mentioned and taken that risk level, you can see that it has hit its target to the top side. And it was, it took a couple of hours, but you can see that the one candle that did all the movement was the actual news-based candle. So I always mention in here that the reason I love news is because it provides catalyst. It provides a lot of movement in a short period of time. The way that I mentioned that I personally like to trade it is in the 2-hour binary contracts. Reason why is because they have a very small duration. I'm sorry, the shorter duration is good, but the spread width is very, very small as well. I've given you guys homework. I told you to go look at it. I'm going to speed it up today. The spread width is 4. Okay, the spread width is 4. If you look at just this candle, now remember, the binaries, the 2 hours are on the top of the hour, so you would have had to trade an 8 to 10 binary this morning. If you look at from basically the 8 o'clock candle where we opened to where the spike went to is about 30. It's 34.5 pips. Divide that by 4. That is 8 strike prices that move. Now, the way that you combine this and trade it, we know that we had a level here. We've seen it in the past. We've seen buyers step in. We've seen a little bit of a bounce. You had the level there. Knowing we were going into this one, if you take a shorter duration contract, like the 2-hour binary, a little bit farther out of the money, it lowers your risk down a lot, right? And then when you get that explosion, you're able to take it out for 2 or 3 times what your risk level is. That's how you trade these things. And again, I've drawn it 2 different ways. One off the big level, if you caught yesterday. But what you could have done is actually taken a smaller position over here, or a smaller risk based off of the opening of the European session. And you can see the difference in the two, the big pink versus the little pink. The reason I'm showing you this is because if this is what your risk level is, you can take a larger position size based off of the lower risk because you're risking the same amount each trade. So doesn't matter which one you do, but this is the exact reason why we talk about using those working orders. You play the spike on the way up, you take your profit out, and then what happens is everybody else that gets greedy, it's like, no, I'm just going to hold it and don't pay attention. You're seeing the pullback now in price.
Yeah. In fact, I wanted to flip that. I mean, I wanted to show that right
Mhm.
now. This is just crazy. The wild move that this has just made. I mean, we can see this green can. In
Yep.
fact, I'm going to make this bigger just so we can really see what happened. I want everyone to be able to see this. This candle right here was the report, and you can see. The wick goes all the way up here. What was that? 1, 2, 3, 4, 5, 6, 7, 8 binary option strikes, and it started heading towards its 9th. And I wish I had recorded this because this top one was trading below 10.
Mhm.
Was trading below 10. It's now below 10 again. It was below 10, but when this spiked up, it went into the 60s.
Mhm.
I mean, the risk reward. I mean, these wings, and I'm just picking the one that's the furthest out. I mean, you could have grabbed any one of these. And the thing is, these all went deep into the money. And now on the pullback, if you didn't lock in your profits, this is that whole. I mean, the whole concept of get out of your trade. Um,
Mhm.
the If you didn't get out, you might have you might have turned a nice big winner into nothing. A potential losing trade.
Yeah,
So
I mean that's when I say out of the
yeah.
money, guys. What I'm saying is a lot of times for these news releases, you can get it in there for anywhere from $15 to $20 worth of risk. If it goes against you, you lose 15 to 20 bucks. You could turn around and set a working order on the opposite side to take yourself out. If you're risking $15, you can set a working order to take yourself out at $60. If it does nothing, you lose. That's trading. But if you combine the other factors, we know there's a catalyst. We know that the dollar is a very sensitive subject right now. We know the interest rate is sensitive. We know that we had buyers there anyway. Again, there's going to be obviously a certain level of risk in that. But when it spikes through, risking 60, or I'm sorry, risking 15 to make 60, that's a 1 to 4 risk to reward ratio. What that does, if you're able to kind of maintain those 1 to 4s on all of your trades, it requires you to be, you only have to be right 25% of the time, 26% of the time, right? To be making, to do trades. So people talk about win-loss ratios and how often does this work and what's the win percentage. Again, it's more about the money management and the position sizing than it is about the win percentage. And people get they focus on the wrong things out there. But if you think about it, this is a trade. If you put this trade on before the news release came out, or maybe 10, 15 minutes beforehand, and again, you took that tiny risk, you didn't have to do anything. You didn't take yourself out. The working order took you out. You've completed your trade in less than 15 minutes, and you can be done for the day. So
yep,
that's kind of how it works.
So that was the wild ride there in the dollar that's going on right now, following the inflation data, the CPI data. You want to take a quick peek? Yeah, let's take a peek at oil. I mean, let's take a look at the inventory that we got coming out, and then we'll do some analysis on the chart.
Yeah. So, I mean, inventory was forecast to be just about 1 million barrels lower. It came in at 0.8, so just a little bit under that. Nothing too crazy. Remember, this is the industry-specific report. As far as what the forecast is, they're saying that it's minus, 0.8, so right around where it came in. I guess the inventory for the API, they expected it to be a bit more. So where we are with oil right now is pretty interesting. Oil actually had a big move in the overnight. And again, we saw it kind of push all the way down. Oh, let me bring this back up to 30-minute. So this is one of those scenarios where, again, we've talked about little, the mirrors. This is actually a big move in the European session. We have seen this before. Does the slight miss in the inventory justify this much of a move? Not really. I mean, this is when we're talking about the move, that's about a $2.10 move. Typically, oil news inventory report releases are good for about $1.30 to $1.60. So I would say that this is more than what is normal, and we're actually seeing it retrace now. And again, if you guys watched the session yesterday, all right, let me say this. At the European Open today, there was an entry. It was an area where sellers had stepped in. We'd seen it in the past. We had nice basing. We had a pushback. That was the end of the U.S. session yesterday. That was a good sell area. Had you watched the presentation yesterday when I talked about using Fibonacci for retracement as well as extensions, if you remember, the extensions are good for what? Predicting where targets of trades would be. Okay, I just wanted to draw this for you, and I said that I would do it yesterday, so I'm trying to follow through. If we draw our extension, we went from high to low. We go back up to where our entry level is, and you guys can see, where did price turn at? Right where the predicted target was going to be, which happened to be also a level. So remember when I said that some people use Fibonacci for their entries? I use it as more of a confirmation after the fact. And again, this would have been a trade that we were already looking to get entry in, but where would our expected profit target be, or where could you have put a profit target? Well, right there. And you can see now is rallying back up again from that actual target level. So again, just using the tool we used yesterday, I would say as far as what we have going on for today right now, with it rallying higher, again, the European session tends to give us one direction. That's why all the black lines are drawn here. But I mean, you can see this was yesterday, or 2 days ago, and then we were back up again. Yesterday, kind of the same thing, right? We closed low, and then we closed up here. Today, we've kind of pushed all the way down into this level. Now we're officially a 30 candle. If we continue to follow the same type of patterns again and again and again, like we've seen, again, here, this one was down, and again, not perfect, down, up. This was kind of it ended high, but then drop. And then again, up, down, 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 down. You see it again, it keeps repeating, right? If that's the case, again, we have buyers. We know that we had buyers sitting in this area. It's already starting to rally. It could be an opportunity for us to get back up into the 68, maybe in the 68.50 range today. Again, they're already kind of expecting to miss that a little bit. If they don't, or if there's more out there, again, these are things that could all, raise the price higher. So, it's kind of set. I would say right now the trade is really kind of, I'd say, already happened for the day. At this point, we're playing kind of the retracement. But again, there's a number of different tools out there you can use for this one. And again, if you guys want to, I don't have, unfortunately, the settings set for it. But if you're looking for longs, again, you could also take fibs, draw it in this direction, and also say, hey, listen, I know that was the target. Could I reverse it now because we're at the session open again? And the answer is yeah, probably. You'd be hitting about the 50% retracement. And again, that's where kind of your targets would be in the opposite direction using extensions. You can see we're kind of having a little hiccup right there, but where the rest of the extensions are to the top side. So again, fun with indicators is always great. Go ahead and do it over on your Nadex platform and see if you have some entry over there. But again, if we come up into the 68.50, I wouldn't be surprised today.
Now, what I would like to point out, if you were unable to join yesterday, the recordings are eventually going to be available on the Nadex website as well as the Nadex YouTube channel. So you'll be able to see those on the Nadex YouTube channel. And if you're just looking for Brian's session and you'd like the slide deck, if you missed yesterday, there is a slide deck that went along with that presentation. You can email customerservice@nadex.com, and request it. In fact, you know what? I think that's probably. Let me go ahead and switch over here because it is that time. Uh, I'm going to take that as an opportunity to say, if you got any questions, go ahead, please email customerservice@nadex.com. But I would encourage you, if you'd like the slide decks, you'll need to specifically email them and request them. And then you can actually have Brian's slide deck in front of you if you want to review his session on technical analysis, rules-based trading around technical analysis. It's an incredible session on Fibonacci's. And you can review the session with the slide deck in front of you if you like. Again, the recordings will be out on our YouTube channel, hopefully within 24 hours. If you'd like to reach out to Brian directly, you can certainly email him at support@keeptradingsimple.com. He is available. And I think just a quick recap of what we discussed this morning, CPI data just came out, and we saw a wild move in the US dollar. And we're keeping an eye on oil. Oil did sell off overnight, bounced on that news a little bit, but we do have that oil inventory report coming out at 10:30 Eastern.
10:30. Yep. Remember,
10:30 Eastern.
the way to trade it is to drop down into the 5-minute candles around 10:15, see if we have any basing, and then look for price to drive into a 30-minute supplier demand level. And that will typically dictate where price will go, at least from the release. Not the end of the day, just the initial spike for the news release. So.
And that's in an hour and a half from now. So be sure to have oil up in front of you when that number comes out. Trading around those news events creates opportunity. With that, want to wish everyone good luck in the markets, and we'll catch you at the next session. Thanks, everyone.